One.
All right, the Bulls did a pretty good job on Friday and did a pretty good job on Monday. Bears made a little attack overnight, but we're up on the session. We have some earnings reports to cover, some good, some bad, some really bad. 8:35, Christian Tharp from T3 Trading joins us to talk about, his technical setups. It's Tuesday on pre-market prep. Let's get it going.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. We're up 9 points, double bottom overnight at the
We need the charts, Joel.
Oh, I see one day off. And,
one day off.
One day off, and I'm all, call me Rusty Hanover. And if you know what that's meaning behind that, then you're a horse racing fan. Double bottom, 54.80 area, up $10 here at 55.13. We got three highs to contend with. Let's call it 55.30. Buck flat, 104.35. TLT flat, down 10 cents. Crude, is that a 5 handle? Holy mackerel, what are you guys doing to crude? Down 50 cents, 75.31. Gold meandering in the 2400 handle, up 580, 24.31.30. Silver trying to get back over 28, up 7 cents, 27.94. Bitcoin futures, they're in the red, but still holding strong here above 65K, down $835 at 67,000. Just call it 67,000 even. Let's bring in Triple D. First question is, did everyone in the chat behave yesterday? Because they were getting a little chippy at the end of last week and stuff. And we had
Our
some
chat always behaves.
Always.
They always behave.
Really?
Never say anything negative about me. Never say anything negative about any of our guests. They're always behaving. Our chat's awesome. We love the chat.
Dennis, maybe we'll start the day with how many hate tweets you get per day.
Only when I tweet about Tesla, I get the most hate tweets. I tweet one positive tweet about it, and then there's 20 hate tweets coming at me about Tesla.
I think you would get more hate tweets.
Tesla.
I think you would get more hate tweets if you tweeted anything negative about Tesla.
No, it's not that way. It's an opinion. So you do. You're right. You get them both ways because, like I said, people love Tesla or they hate Tesla, but they all have an opinion of Tesla. Nobody's like, what do you think of Tesla? And they just say, what's Tesla? Or they just say, I don't, really care about Tesla. No, they care. They love it or they hate it. They love Elon Musk or they hate Elon Musk, and there's no in between.
Okay, let's just cover that real quick because we started, and then I have some anecdotal evidence. I have something to discuss with Tesla that I just want to bring forward. So give the news, give the price action as it floats here.
Not a lot of news today on Tesla, but there was a Wall Street Journal article last night that came out, and you'd think would knock Tesla down a bit, but doesn't at all. The hidden autopilot data that reveals why Tesla's crashed. It was a special report from Wall Street Journal. It didn't go down a sniff on that. I mean, they know, and I didn't watch the special report's 13-minute video on why Tesla's crashed. I mean, all cars crash. So I don't know if people thought that this might go down on this. It didn't. It's up another 1%. But the reason it rallied yesterday, and we talked about this, was the release of 12.5.1. So the new FSD came out. Obviously, not everybody has it yet, but a few people were trying it out online. It's really good. We were talking about, the updates. It's really good. So what I found interesting yesterday, at one point in time, Tesla was up $12.51. And I think they were celebrating the release of 12.5.1. So basically 12.5.1, if you weren't listening to the show yesterday, just the new release, full self-drive, over the one that came out 3 months ago. And it's corrected a lot of issues. Some people were saying that they drove a substantial amount of distance, 0 interventions. One person was comparing it to the 12.3, which came out 3 months ago, said on this, I did the same route. I had to do 20 interventions. On 12.5.1, I didn't have to do any interventions. Now, there's still interventions. There's still some people finding So one took a left turn a little bit too, tight, so one slammed on the brakes for a yellow light. So there's still issues. We're not there, but you could see every time a version comes out, this gets a hell of a lot closer.
Okay, so we're gonna just talk about this real quick. We're gonna move on. Anecdotal evidence, and I know Tesla is so much more than a car company. It's a humanoid. It is
not according to Gordon Johnson.
Okay, well, different opinions. This is a true story and a much shorter one than I gave on Friday. My brother-in-law came in from New Jersey. He drove his Tesla for a reunion. He came over for brunch on Sunday. His car was only at 60%. He asked me if I knew where a supercharger was. He couldn't find a supercharger in the area, all right? He had between, which is normally like a 1.5 tank ride, okay, between here and New Jersey, he had to stop 3 times to charge it and a half hour each time. So
how many miles though? But how many miles is
that? From here to New Jersey, I mean, what is it? Like
let's see, let's do some quick
does it not go? Is there not 400 miles on a Tesla?
Well, the most, from what I understand, that most of the ranges that they say, they end up being like once you drive the battery for a little bit, it goes from like 400 to 250 like real quick, especially in the winter. So where are we going to New Jersey? Just anywhere?
It's called Princeton.
Okay. Some smart people over there, from what I understand.
Yes, my sister's so smart. Should have her.
What happened to you? To here, Joel, to Detroit?
Yeah.
So we're just seeing the distance. I'm getting range from 250 to 450 miles, depending on which version you have, which obviously. So
620 miles.
Yeah, it's just called 650 for simplicity.
650 miles.
That's almost the exact same as it is from well, actually, let me double check that. I want to say from Detroit to St. Louis. When I make that drive, I have to stop 1 time and fill up. But I've heard
stop 3 times.
Yeah,
I've heard that complaint before, that like they advertise a range, and then as soon as the car is driven a little bit, it ends up being much less than what the range is what they bought it at. But I mean, they have like the superchargers, right? So they charge up.
Yeah, but he couldn't find a supercharger. I should have asked Raz where he probably has one in his garage. But he couldn't find superchargers, and the other thing, and along.
I mean, these were complaints from 5 years ago too.
I'll tell you, no one in Colorado, no one in the Colorado mountains. I was out there a couple months ago. No one going up to Aspen. There's just no there. You won't have Teslas up there, because you're going up and down. Like, I mean, it just like they won't have them in that state. And there'll be few around the cities, but like when you're doing these long drives up to the beautiful mountains and stuff, you can't take a car like that, because you're going to get stuck. So I just, I know, but it's not a car company.
Joel hates Tesla. He's on the hate.
I did hate Tesla. I'm just giving you.
Your wife loves it though, because your wife still owns it.
No, we sold it. We sold it a while ago.
You're out of Tesla now.
We're out of Tesla. Yeah, it was a nice run. No, I'm just saying, I'm just giving you anecdotal evidence that, Dennis, that's it. Let's move on.
Okay, so because you bring up, I have to be able to debate you back. So this argument was 5 years ago, Joel. So your argument you're giving that nobody's going to buy a Tesla because
I didn't say no one was going to buy a Tesla. Don't put words in my mouth. I just say no one's going to buy a Tesla. I'm just saying if you're doing long-term driving, it's that problem. Until they have superchargers everywhere, then I think long-term travel. I might be wrong. Maybe he couldn't find superchargers. I'm just relaying evidence.
I agree. If you're traveling big distances, electric cars probably aren't there yet. I think they're going to continue to get you better range. I think that's something that they're working on that too. I mean, they've been working on that for years. But obviously, this was an argument we gave on this show 5 years ago when we both hated Tesla. Me and you were always hating Tesla 5, 7, 10 years ago. People saying, "Oh, you've been a Tesla lover since birth," and no, it's not the case. Go back, listen to the old shows. Right. I've liked Tesla for the last 6 months, but it's not about range. It's about FSD right now, because range is the range. It's 250 to 350. It's not new information to anyone. Oh my gosh, these things can't drive across country without filling up multiple times. No, they have to fill up. That's why when you go to the city, you see a lot of Teslas in the city, because it's really great for city driving, where you're not going huge distances. I mean, if you're going to be driving road trips, you're a driver, you're delivering things 500-700 miles. Not a lot of people doing that. So I don't think the range is an issue. I don't think the range is all of a sudden going to be like, wait a second, these cars don't have as much range. We know that information. That's not new information. What is new information, why the stock went up yesterday, was 12.5.1 from the reviews that I've read is pretty awesome. So FSD just getting closer. That's, the point. And we're not a Tesla show. So we're just starting it up why it was up so much yesterday, because everybody was asking why it was up. That's why it was up.
Okay.
I guess I was just going to say before we move on real quick, and we should move on from Tesla because like you said, this is not a Tesla show, but you mentioned that we talked about the one analyst note yesterday. Dennis, did you see the one from Truist?
No.
Okay, so here, let me share this real quick. This is coming from William Stein at Truist. I'll share the article real quick, which I hate to do this because it's from this is on Yahoo, not Benzinga. So William Stein, a Truist Securities analyst with a hold rating on Tesla stock, took this as a cue to test drive one of the car maker's vehicle and narrowly avoided a crash. Now, I don't know if this was using the 12.5 or whatever the new one they put up.
What's the date of that?
He put this out yesterday. The note was on yesterday. Okay. So I think he did it over the weekend. The Model Y accelerated through an intersection as the car in front of us had only partly completed a right turn. My quick intervention was absolutely required to avoid an otherwise certain accident. And then he talks about, so he's like, based on that, he's like befuddled at what Tesla might show at an unveiling of robotaxi prototypes in October. So again, I don't know if this was using the newest one. That would be nice to know, actually, because if it was using the old one, then this is probably, it doesn't matter as much. But if it was using the brand new one and he still had to intervene, then it might not be, as great as some of the Tesla bulls out there are making it out to be. Either way, we talked about it yesterday, how important this October 10th event will be, because now now people are expecting that Tesla is very close to actually having the robo-taxis and having the full self-driving needed to do it. And, at this point, it's kind of been like a prove it for Tesla because they've been talking about it now for so long.
They want to stop talking about Tesla, so we've got to move on here.
Yep, that was the last
thing. We're going to have to ban Tesla talking from the show. So this will be the last thing I say, because the chat seems to hate Tesla, is I'm holding the stock. I'm dollar cost averaging into more. I think in 5 years, it's one of the most valuable companies in the world. Done. Let's go.
All right, let's move into some earnings. Let's move into some earnings.
Arguing with Lisa. I'm going to say this, and then the argument. Now I'm going to say one more thing. Oh,
I'm giving my last point. People don't want to talk about Tesla.
We love it. Let's go.
All right, earnings. CrowdStrike. Before we get into earnings, let's talk CrowdStrike. So we talked last week about the fallout from not last Friday, but 2 Fridays ago, the outage that, disrupted various industries from airlines to banking to hospitals, and basically the CrowdStrike faulty software update impacted, millions of computers that were running Windows operating system, which is a lot of computers. And now you're seeing some lawsuits coming in. Delta Airlines coming in to sue CrowdStrike for the disruptions it caused to Delta's operations. And, more so than it is just about this specific lawsuit, this means that there's a strong chance now you're going to see other companies come in and start filing lawsuits against CrowdStrike. You also had some analysts coming in at Needham, lowering its price target from $425 to $375 based on this whole mess. So CrowdStrike this morning getting hit down about $10.
Wow.
The fallout is still happening here, folks. And if you're coming in, catching the falling knife at 350, at 300, at 275, even at 250, you're now down money here too. Lawsuits coming in here now. Oh my gosh, somebody's gonna sue. This is not shocking information, but when valuation is extraordinary, like in the case of CrowdStrike, I know it's in the case of Tesla too, but you have a bad step. Tesla has a bad step. If CrowdStrike has a bad step, and this is a serious bad step, valuation contracts very, very, very quickly. This is what we are seeing. We're seeing the stock revalue here because the confidence in the product has been shattered. That is why we're having a full revaluation of this stock right now. So it's going to take a lot to get that confidence back. It's going to take a lot more than $10 gift certificates. So Delta suing them, Microsoft as well. Microsoft's, this is dropping the bucket for Microsoft, not for CrowdStrike. I'm still waiting, not catching the falling knife. Is it on the watch list? Sure. If it starts to bottom, we think we're getting past it. But we got one of probably many lawsuits to come here now. So I just think there's no reason to be a hero here. I think you're going to get a chance to get CrowdStrike and potentially at cheaper prices. Maybe not, but I don't think it's going straight back up.
Yeah, first of all, proving the damages, second of all, like how long is this going to take? And how long, and I'll just bring up, and we still have it ongoing. I don't know if they say, look at the Triple M, look at the Malays. Now it's a different story because of the valuation, but years, this thing can go on. This is big. It's good. At least, the lawyers are going to make money. I agree with Dennis here. And it was weird because when it had these dips, I remember even over the last 4, 5, 6 days, I remember seeing it green a lot on the session. It was like an upgrade or a downgrade or an upgrade or some kind of momentum. So, obviously that closing price here is going to be tough to reach today. But right now, I think if you just want a point to look at for today's session and say, okay, can it, the low of the year, he's giving back all the gains from the year, and that comes down your yearly low in CrowdStrike comes in at 238.61. And we're almost there. So keep an eye on that for your low for the year in CrowdStrike.
And I don't know. I saw some people in the chat saying like CrowdStrike is going to be dealing with this forever. I don't necessarily. The thing with CrowdStrike, it's a cybersecurity company. I think at least that this came from a faulty software update from the company rather than like a hack. Because if it was a hack, and your own cybersecurity company gets hacked and causes this whole thing, then that's a bigger deal to me than like, they had just a software issue. And I think in this time right now where the stock's drawing down more than 20%, it's very easy to say, oh my God, this company is done. I think, there'll be a time in the future where we look and CrowdStrike is still one of the biggest players in cybersecurity. From what I'm reading, there's been a lot of analysts that have talked to CrowdStrike's customers. What they're doing right now is not switching from. Well, yeah, there's going to be more lawsuits, but they're not switching from CrowdStrike to, other companies. They're asking CrowdStrike for, deals. They're trying to say like, okay, if you want us to keep us, then we're expect, a 20% less to pay 20% less for your services going forward. So it's like, okay, well, at least if these companies stay with CrowdStrike, there's going to be high switching costs to go to a different cybersecurity company. So I'm not saying I'm hopping in and buying the dip right now on CrowdStrike. I would just push back against the idea that like, this is it. CrowdStrike is going to go under and be done as a company. I think.
Yeah. And I don't think anybody is saying they're going to go under and be done as a company. What I'm saying is the company is trading 481 times current earnings, 64 times forward earnings, which those earnings projections are likely to go down. So the 64 PE was based when the company was firing on all cylinders here. So if the E is going to go down, it means the P is going to go up higher. The stock is not cheap whatsoever. It was priced for perfection, and they just showed us clearly they're not perfect, and clearly they are very much, a big part of everything, which, it's good to know that they're a big part of everything. But man, I can't believe, I couldn't even you couldn't get your quotes right, Joel. I couldn't place a trade on my one software. It's in everything. It was crazy how that one update affected so much stuff. It's kind of scary how dependent we are on some of these companies. So, with that being said, they're in everything, obviously. We just realized that. So I don't think this company's going away whatsoever either, AB. I just think valuation matters all of a sudden. And paying 64 times earnings when the E is in question is a hard thing to do.
And every time you're looking at this and you're ready, like I just got to buy, and I know it was different circumstances. Look at your Fastly chart, right?
Never came back. Never came back from their issue. Now, maybe CrowdStrike is not Fastly, but Fastly we know had their issue when we had the major outage there. Stock was $20. It's $8, never came back.
All right, well, let's get into. All right, go ahead, Joel.
Well, and I just wanted to say, I'm having trouble with Equifax too. Now I know that was a hack, but remember, when that happened, it took a long time. That eventually came
Long
back.
time to come back.
Yeah,
too.
that was hack. So yeah, that's it. Caution. All right, AB, go ahead. I'm sorry.
We were talking about the PE, price to earnings for CrowdStrike. That's a good segue for us to get into some more earnings reports this morning. Let's start with Procter and Gamble. Procter and Gamble this morning reported earnings, revenue miss. EPS came in at $1.40, beat the $1.37 estimate, beat by 3 cents there, but sales came in at $20.53 billion, missed the $20.74 billion. It looks like the guidance was the full year 2024 outlook revenue was okay, kind of in line with estimate. The EPS was slightly on the lower side, 691 to 705 versus 697 estimate. Trading lower, Procter and Gamble getting hit here, down about 5.5%.
Man, it's valuation on all these companies. Like, why don't you own Procter and Gamble? It's 24 times earnings.
Diapers
it's consumer staples. I mean, we pay so much. The market just pays so much for so many companies, and then it pays nothing for other companies. It's such a weird market where, obviously, and we've talked about Alibaba 5 times earnings, but Ford 5 times earnings, General Motors 5 times earnings, but Procter & Gamble's worth 25 times earnings. Again, the business isn't cyclical. The cash flows are more stable, so you kind of know what you're getting. But I argued before, in a 0% environment, I paid 20 times, 24 times earnings. When you're up here 4 or 5%, you're paying 24 times earnings. It doesn't seem as worth it. But you know what? They've been bouncing these stocks back. These stocks are in the gutter. Maybe it's the low interest rate trade coming in that they've been running the consumer staples, and the consumer staples have been running here now, Joel, for the past couple of months, basically getting up near highs here again. Just feels like the evaluations are getting lofty here. And consumer staples go up with 2 reasons. One, if interest rates are going down, which they're apparently gonna, but 2, they also go up as defensive. When it's the stock market, when you're taking money out of your tech, names, and this bubblicious over there, they move them into this other stuff. But this kind of stuff's kind of bubblicious too. I mean, do you want to pay 25 times earnings for Procter & Gamble with 0 growth? Or do you want to pay 35 times earnings for, or 40 times earnings for an NVIDIA that had a lot of growth? Like, I don't know. I've sold my NVIDIA. Maybe it's a bad example because I've sold a lot of it.
It's a good example because you sold it in the 130 handle, Dennis. A majority of it in the 130 handle. So it is. But I just want to make, only me can draw comparisons for 2 stocks, and I like to sometimes make like really bold calls, and I'm going to walk on my hands downtown the Lodge Freeway. I'm not going to do this in Procter and Gamble, but just and I don't have the same conviction as I did on Friday when Deckers was trading up at like 960, 970, taking back half of the move on an earnings report. It actually got to the 50% was 960. It actually got to 980 that day. And I look at that chart. I look at the pre-market chart. And I'm like, all you have to do is sell. Okay. It's different on the downside, though. It's different on the downside when it's earnings. So you would be thinking, yeah, Joel down $9. He's, way overdone. He's going to pick a lot. I mean, I will, but when you have it's just different circumstances. Here's a stock coming off all-time highs just a couple of weeks ago. People are caught. They still have a very low cost basis on it. And we're like, hey, we wanted to puke this at 170, but now we got to puke it at 155. So a little bit of different dynamic. It's already through the 162 area, and there's only one daily low at 159.52. So you got to imagine it might get a little temporary pop here at 160, if in fact it can hold 160. But if not, man, you're just looking at like a death zone here between 154 and 160. So that's my look.
It's hard to think they're going to, they bought Abbott Labs back yesterday. You weren't here, Joel. I mean, there is underneath demand for these kind of stocks. People see them as staples, which exactly is what they are, and they want these kind of stocks too. So when you see Procter Gamble down $8-9, there's money managers that are just going to blindly buy it. So I think 155, great support down there. I'm not sure you get that far down. For me, it's not for me though, just because I don't pay 25 times earnings for it. But money manager's been doing that for a long time. It's not like PG all of a sudden exploded 25 times earnings. It's been trading 24, 25 times earnings for a very long time.
Yeah, totally different chart. Abbott was up over 120, right, in March, and it has had its rough way. It had another temporary, but yeah, it's a totally different chart than making an all-time high a couple of weeks ago. So, PG, we'll see what happens there. Off this 160, not only for today, but keep an eye on that over the next. See if the institutions want to step up there at 160. And one thing, just going back to we talked about over the last couple of weeks, during the decline. Kind of been a little bit of a buyer's strike, I mean, and people trying to sell into strength. So just keep that in mind. Our institutions, is this a long-term play at 160 after, the major run that it had? I don't even know where it started the year. And also, as Dennis mentioned, its valuation.
All right, let's move over to another company that reported earnings this morning. Corning, GLW. Came in this morning. Yeah, some shattered glass this morning. Corning reported EPS of 47 cents, in line with revenue, in line with expectations. Revenue of 3.6 billion, beat by 20 million. But the outlook was below estimates.
Oh my gosh. How did that happen?
I don't know, because this was a stock that
didn't they just come on and say didn't they just preliminary numbers? Am I not right that they just came out with preliminary numbers and said that they were going to blow it away?
Yes.
You're
and then
right.
A month later they don't hit those numbers?
July 8th. So this was about 3 weeks ago. 3 weeks ago yesterday, the company came out with preliminary numbers and the stock popped more than 11%, closed up around 12% that day, continued moving higher, went up another 3% the next day. So this stock went from 38 all the way up to 46 on that preliminary report. But then the outlook,
that's bad.
This quarter was not as good. Stock dropping back down a few bucks here, trading right around $39.33.
So, okay, so they did hit those numbers. They came out with preliminary numbers, which I don't know why they bought GLW up that much that day. I remember that day, and it's like, oh my gosh, they just went crazy. They were raising their estimates up slightly, and they raised the revenue estimates up slightly. Well, they hit those slightly higher numbers. Everybody's like, oh my gosh, they're raising guidance. So then look at the numbers. But they barely beat, those estimates. And they came in line to what they actually said. So they didn't even beat what they said in line. They came in line to what they said. This was just not that blow-away report that they priced in. So it's funny. They gapped it up from 38.44, Joel, that day up to 43.58. It was up like 15%, and they kept running it after that. Well, they look like they're going to give it all back here. It looks like it's now down to 39.50 here. The gap fill would be down to 38.52 if you fill that gap. So you got another buck to go, but then it would fill that entire gap, which I think is deserved. Because when you look at this and you think they came, they're like, oh, we're just killing and killing. And then they just came in line with what they said. It really didn't kill it that bad. So I think it's deserved to give it all back.
Rumor has it that they hired the accounting department from Delta Airlines.
Oh gosh, these are
bad. And they're taking. I mean, because how could you be more wrong? Yeah. I would be if I had this stock so long term. And they had this, and they pulled this kind of mission, guys. I would just be out. They weren't
really wrong. They just said how awesome it was going to be, and then they just came in line with their awesomeness.
And what the market
it wasn't really even that awesome. It wasn't even that awesome. Delta was just brutal. They came out, we were just flying. Everything was going, pun intended there. And CEOs on there saying this is the best ever. We're in such a good situation. And then 3 months later, they warned. I mean, how do you not know your business a little bit better than that? So this is obviously very disappointing for Corning shareholders here after, the talk up. They had to come out mid-quarter to say how good we were doing. And then they come out and they're like, well, no, we just hit it. So in 45 days, something changed.
Yeah. Someone's getting come down to, you remember when you were in high school, grade school, it's all sort of the loudspeaker, you heard Joel Elconin down to the principal's office, please, and you're like, oh, man. What do they find out now? Well, that's that guy's opening up his email, the accountant. Could you see me in your my office this morning? Do you have time? That's what's going on over there at GLW.
All right, some other earnings this morning. A lot in the biotech land. Let's go over to let's do Merck real quick. So Merck reported, and this was a interesting one because the numbers were good, double beat. The guidance for EPS came in. So they lowered some EPS guidance, but then they also expected sales above what the street was estimating. Actually, that was kind of in line too, but they double beat on EPS, so came in at $2.28, beat the $2.15. Sales came in at 16.11 billion, beat the 15.84 billion. So those were good, but the EPS guidance was below estimates. So the stock initially popped on the earnings all the way up to above $130 a share, and then quickly the sellers came in and started taking those profits, and now the stock is trading down about 3%, right around $124 a share.
Yeah, well, the headline numbers came out, but then when you dig down, you read the guidance and you see 794 to 804 versus prior estimates of 853 to 865. That's just a flat out lower. They just flat out lowered guidance here, like significantly. That's like a 8-9% lowered guidance. So that's why stock is getting hit here now. It's not one of your cheapest pharmaceuticals. It's kind of in the middle. You got Lilly at nosebleed valuations. You got Bristol Myers at floor valuations. And then you have Merck that's maybe not in the middle because Lilly's so much higher, but trading 15 or 16 times. You can extrapolate it quickly. Say they make the $8 they're sitting ahead. Stock's at 120. It's 15, 16 times earnings. It's not bad priced. It's reasonable. Again, they're not in the weight loss drug area, though. They should go, like I've been saying for a while, one of these companies should go and probably buy VKTX or something, or get something going, in the weight loss drug area. And maybe Merck did say something. They were trying to work on something, but I don't remember. Maybe I jumped that up like Joel. It's tough. What's the story here? You just lowered guidance. What's the story? Why does it turn around when they got no story and they lowered guidance?
Nice exit on your VKTX. I don't know if that was on Thursday or Friday. Back at 61.80.
Coming back in. I want to get it back in the low.
I knew you were going to say that. I knew those are
the only reason I sold it because every time the thing pops 10, 15, 20%, you look at it a month later and it gives it back. So I don't know. And the other thing is, why I said VKTX, why I sold it, was because this company isn't just got a ton of cash. They're going to have to, if they don't get bought, they have to do another offering and they'll have to dilute the shares further, and that's your opportunity. I do think there's a possibility. A guy Domi saying could get bought up for $100. I think that's a possibility too. I do. But there's a lot of competition coming here now. Lots of other companies working. They felt like they were number 3. There was 1, 2, and then there was Viking. So I don't know, I don't know if it's got the, again, it's only going to the 3rd trial here too. So I mean, imagine one of those trials doesn't work. I mean, the thing gets cut in half that day. So it's higher risk play for sure.
I'm just going to just give the Merck, and I'm just going to give, I have a long-term position in Merck that I've had since, I think, the lower 80s here. Don't have any intentions of doing anything. The year or the
price?
I did own it in the 80s and I sold it, but then I rebought it again, I think in 2021 or 2022. I do remember that, but that was a re-entry. But just long term, I just with this 120 area. I mean, as long as it holds above 120, you have a trading range here. Holds 120. Holds 120. I think you stay in this range. I think if I was a longer term shareholder and I had a solid breach and closes under 120, then I would encourage the investment committee to look at a sell position or
maybe the cash burn. I'm just looking at the cash burn. So here's a lesson for you. If you're investing in small biotechs, always look at the cash burn rate. Look how quickly it's going to burn, because they obviously your job, and I've said this before on the show, your job when you are a small biotech company is to burn cash, to see if you can get there. It's their job to burn cash. So you always you can't just say, oh, this company's got 900 million, so it's worth 900 million. No, they're burning the cash. So how quickly is the burn cash rate? Some people are estimating to get through phase 3 would only be 300 million. So if that's the case, maybe they don't need to do an offering. Maybe the burn isn't going to be as bad as we think. So maybe they're okay at the 900 million. Maybe they're okay for a while. So I don't think there's an offering imminent here. I do think eventually, if they were to get this all the way, they would have to probably do another offering. So I actually I'll take that back. Just reading quickly, that's 1 minute of research. It looks like the cash burn rate isn't that bad.
All right, well, we're waiting for our special guest for the day. Christian Tharp will be joining us again from T3. We love our T3 Tuesdays. We'll go through a couple more.
He's coming in a minute.
Yeah, we'll go through a couple more reports here real quick. We did have PayPal come in this morning. PayPal, wow, I mean, this stock had been a dog for so long. Finally getting some love here this morning, trading up about 8%. EPS came in at $1.19. Beat the 98-cent estimate. Sales came in at $7.9 billion. Beat the $7.81 billion estimate. And then they did announce a buyback, I believe. I'm trying to get the details on that. Let's see. Well, they announced good guidance on top of the double beat. So stock is trading higher by let's see, about $5, about 8% this morning on PayPal. And again, this thing was trading at like, it got all the way down below $60. Has just been a dog for the past, has not participated in the broad market rally whatsoever. But getting a little pop here. I don't know. I mean, if that's going to hold or what, but PayPal trading higher after the report.
Bar was really low here. I actually took it through the report intentionally because I was like, I think if they miss, I don't think it gets killed, but they say anything okay, it probably pops. It was a small position I took. I never take huge positions through a report, like on a trade intentionally, but I was like, I'll take a small piece because I think if they say anything okay, it's going to pop. And that's exactly what is happening here. I sold it a while ago. I think I sold it in the 62 handle, so it's up in the 63 handle now. So big move here for PayPal. I'm not chasing it. This was a decent report. I don't know if this is a turnaround story to bring to 70, 80, 90, but it's a relief pop. This bar, we talk about bar all the time. Bar was high for GLW, very low for PayPal.
Pre-market high over $64. It went to 64 even. I don't have that much on the dailies here to say, wow, that's a great number, but I do have a 63 high. So that's what you want. You want a bid here. You want to clear 64. You want to set your sights on 66. But man, we've seen Square and PayPal a lot of times have these up opens, and then you're like, wait, what happened? It was up $4.50. Why is it unchanged now? Don't know if it's going to come down on unchanged, but very important to let's see the bidders here. I'll get the thing over 64, holding a 64 bid, or else I'd be looking for a fade here in PayPal. Haven't looked at Square in a while. SQ, oh boy.
And look what's happened, Joel. PayPal has now passed Square back. It's always the battle. Who has the higher stock price? PayPal's winning, Square is winning, PayPal's winning, Square is winning. These stocks are always between 60 and 75, it seems like, or 60 and 80. It's just a matter of which one's higher. So PayPal is back above Square, but it seems like whenever PayPal gets above Square, PayPal's a sell and Square is a buy.
All right, time for our special guest of the day. We do have Christian Tharp, of course, joining us from T3 CMT. We love having Christian on. Without further ado, let's bring Mr. Tharp on PreMarket Prep. All right, Christian Tharp, welcome back to Benzinga's PreMarket Prep. How are you doing today?
I tell you what, I am doing great. Thanks for having me, Aaron. Always love being on.
Of course. So let's get into some charts and some stocks. What have you been watching? What have you been trading?
Well, I tell you, obviously, I believe this week is our lovely FOMC week, correct?
Yep, tomorrow.
Yes. So for us in our little trading universe, a lot of chatter around that. And like clockwork, what I always try to do when you talk about charting is, a lot of discussion about, what's going to be said, rates, all that kind of wonderful stuff, the statement. But what I started doing about 3 years ago, I started kind of showing on my screen, on my charts, showing how actually the market tends to tip its hand, before an FOMC, probably 80-90% of the time in what it plans on doing. Certainly not perfect, but take, for example, if you go back to the FOMC statement, the most recent one, which I believe was on the 12th. And if you take a look at the on the 12th, we obviously got a nice pop, but look what was going on the days before. Okay, market had pushed to a new high. The S&P had pushed to the new high there and was consolidating above that high. And the day before the little jump, you can see the little gap higher there. The market had kind of started to push higher, closed toward, yep, right there, closed towards the high of the day, and then jumped right there. Exactly. So what I've done, what I always try to do is show everyone as you start planning your trading week going into an FOMC, more often than not, obviously, as you guys know, I don't tell you guys, technical analysis, just like fundamental analysis, just like any other analysis, doesn't work all the time. But I've been keeping track for about 3 years now. And I'd say roughly, again, 80-90% of the time, whatever the market said it was going to do the day before or the week before tends to be what it does on FOMC day, almost making the statement itself a moot point. So what does that mean for us this week? Well, we had been following anyway, a nice little channel for the S&P, the SPX. We've been following here for the past few months, ever since the low that had been put in. You can go back to, right around, mid-April where the low was put in. And it's been a nice little channel for the S&P. S&P broke out of that last week. All right. So we look at that breakdown. Again, favorite phrase that I always like to use: markets reserve the right to change their mind. Okay. It doesn't mean technical analysis failed. Technical analysis doesn't fail. Part of the definition of it is it's just setups. It's just probabilities. It's just blah, blah, blah.
Yeah.
Right.
Yeah.
So if the market sends us a signal that it plans to do X, it does reserve the right to say, I'm the market. I do what I want to do. But you can kind of visualize there. Nice little channel breaking down last week. Typically, these aren't 1 day or 1 week type of events. A lot of times you can see some more movement to the downside. So that's our expectation as of right now until the market tells us something else.
And Christian, it's not even going to be about the Fed really this week, because so many big earnings reports coming that are really going to dictate the move. Tonight we get Microsoft and AMD. Wednesday we get Meta, Qualcomm. Thursday, Apple, Amazon, Intel. I mean, this is going to dictate the next move. What do you think about the setup into these earnings reports? Like, let's just go to Microsoft first of all. It's sold off a bit. I mean, at least we're not, going straight up into the report. So maybe the bar is a little bit lower here. What do you think about the setup going in Microsoft's report?
Yeah, I mean, I did like the nice little turnaround. It kind of turned around on Friday. Looked like it wanted to make the move higher. We kind of watched this area around 4.25, and it did take that back yesterday. So it kind of looks like it wants to recover a little bit. Obviously, as you know, the space has taken some hits here. The NVIDIAs of the world, all the big names, all the ones that have been carrying the S&P. Like if anyone has looked at the S&P and say the NASDAQ versus the Russell, the Dow, the NYSE, for about 6 weeks there, the latter group couldn't go anywhere. But the S&P, NASDAQ, and all those big names that you just rambled off were the ones kind of really leading the charge. Those are also the ones that have been taking the hits. So certainly there's a case to be made for a recovery into these earnings this week. But you're absolutely right. Big earnings. We're watching SMCI is a big one that we keep an eye on. We're watching the 700 mark in particular.
Yeah.
The stock has made it to that area a few times. This area you can kind of see right around that 700. It keeps holding, dips a little bit below, manages to hold, barely closed below it yesterday. So we're kind of watching, not only because of, whatever goes on with FOMC can send things kind of this way or that, but those big earnings you mentioned, we see a lot of these names as well. But
they're going to report next week.
All of them.
Going back to the overall market here, Chris, I mean, at what point does this dip in the S&P 500 indicate a new trend to the downside versus just a pullback? I mean, right now it looks, just looking at the chart, like a pretty similar pullback that we saw, like you mentioned, back in April. Then we ended up moving higher from there. What cues would you be looking for that, okay, this is going to be a sustained downtrend? Now the trend has shifted versus, no, we're still in this bullish channel. This is just a pullback, as we often see.
Gotcha. Always the $1 million question, right?
Yep.
Exactly. So you go back, we're watching multiple levels on the way down. Certainly we always have to pay attention to things like the 200-day moving average. We have to pay attention to things like that. I tend to focus more on price itself, that whole price is king mentality. And so as of right now, having broken out of that channel, again, unless the market sends me a message otherwise, it did so at the same time it had weakening momentum on the way up. So it was kind of saying, hey, look, we've had a great run since April. Let's take some healthy profits. When you look at what happened in the market and you look at that rotation, it looks like a healthy overall bull rotation. So I wouldn't think, no matter wherever this terminates, I wouldn't think it's putting the bull market in jeopardy in any way. End of July-ish tends to be seasonally, can be a little weaker, so seems to be normal right now. You start breaking things like the high you just mentioned from the previous pullback. I think it was 5, 6, 7% back there, right around the, you can call it 52.50 area from that old high, from that where we pulled back there. I would want to see us fall back below that. That would be a little bit of a concern to me. Certainly 10% is that psychological mark for the market. So I wouldn't want to see things like that get down. Otherwise, we are simply looking at this as a nice, hey, look at that nice, great 3-month plus run. You can't go up forever. It's healthy, seeing a little rotation. But areas we wouldn't want to see, again, is you look at that old peak from back in the April area. I wouldn't want to go back below that. And there are other trend lines that we're watching. But right now, I wouldn't make a big deal out of it.
Got it.
Sam wants to know IWM too, just while you're doing the indices, if you could do us a technical breakdown of the IWM, because it looks a lot different.
Oh, for sure. Well, yeah, exactly. I'm glad he pointed it out too, because if you look at the IWM, you pan out a little bit. Okay. So really pan out on it. Not just, I know a lot of people like to, I always advise that kind of top down and really pan out and take a look. Follow the IWM back at the 210 area. And I want everybody to go back, clear back to 2021. Okay, so you want something like a 3-year type chart. You're going to see this area around 210. That was not only an important support area back then, that once it was broken, that's all she wrote. It was resistance multiple times in 2022, and then again here in 2024 on the way up. As your listener just pointed out, nice little breakout, and that's that rotation we're talking about. Dow took off, NYSE took off. Ironically, watching now the NASDAQ. We look at the 100, the NASDAQ 100, and the S&P declining. So we've seen that big rotation, that big change, and that difference. Everything about the Russell and the IWM looks great here. I can't imagine we wouldn't expect higher prices. And I think you start looking for things up in the 230 to 240 area. Again, referencing those 2021 highs. If you pan out, it looks somewhat more obvious versus if you look too close. So you took out that 210. We tried once before and failed. Now we're firmly well above it. I'd be thinking pull back, however far along it goes. Obviously, the Russell doesn't seem to care, right? Doesn't care at all. Holding on great. I would think once we get rid of some of this weakness in the S&P and the NASDAQ, you're going to see Russell challenging those highs.
And then any individual names, Christian, you're watching. I know you mentioned SMCI. We had a couple chip stocks report earnings. I mean, big week for earnings. Are there any setups that you like heading into reports this week?
Right. So one of the big things we do when you have this big week, as a matter of fact, this week here, there's a couple weeks like this that are our favorite weeks of the year because we can play on the volatility. So we do a whole lot of playing on both sides. It's something we love to do when we know volatility is going to spike, as you have referenced. A stock in particular, so let's say we forget about earnings for a second. Tesla looks great. Obviously, not a thrilling reaction to the earnings, but you'll notice last week it was consolidating right between 215 and 226 for like 2 or 3 days. So if you zoom in on roughly a 5-10 day type chart, you'll see that little consolidation. Earnings, not thrilled, right? Or some healthy profit taking, who knows? And you'll see the drop into it down there. And then for like 2 or 3 days, maybe we just kind of got stuck in between 215 and 226. And our view was whichever way the stock breaks should dictate the next move. Obviously, yesterday answered that question, firmly took it out. So we like Tesla to continue higher. It's just an individual name, independent of earnings. Otherwise, we do tend to stay away from trying to trade earnings, altogether. But we try to do like sympathy type plays. So maybe AMD and the effect it might have on NVIDIA, or SMCI, or any of these other names that are out there. But we tend to like to take advantage of weeks like this, volatility wise, and trust that if we're on both sides, that we're going to catch the win, as I like to say.
I mean, you talked about, the market's tendency to kind of give hints about the FOMC meetings, like whatever it's doing kind of before then, and it is usually giving hints. Do you feel that way about earnings ever? Like if you look at AMD's chart here, it's not looking great into this earnings report. Do you think that increases the likelihood that the report's not going to be great? Or maybe not even the report, but that the reaction to the report, it's not going to be great?
Absolutely. Love that you said that, Aaron, because it is the reaction, right? I'm sure we've all read great reports. Reaction is bad awful reports, reaction is good. So you're absolutely correct. And yes, although again, like anything else, not perfect, there are those times where, to me, it looks like the market has tipped its hand a little bit about, okay, we want out of this before earnings, or we want into this. And I couldn't agree with you more. AMD doesn't look good. Then there's also the kind of the generic mantra, right? Good things tend to happen to good stocks, not necessarily companies, right? The stock trending higher. It seems like everything is favorable on the way up, right? AMD kind of on the trend down. As you said, not looking great the past couple of days, not looking great lately. Certainly, if I had to go red or black on AMD, I'd probably going for the downside.
There you go. All right, Christian, well, coming up on time here, do you mind telling us a little bit more about what our viewers can get if they sign up to trade with you next week?
Oh, absolutely. 100% free open house. I do have somewhat of a unique approach to trading markets. I do try to keep it simple, first off, which nowadays is somewhat unique. Just keep it simple, stupid, right? Don't overcomplicate it. But I like to do things with being on both sides of the market and, kind of work trades, that might otherwise be non-successful into successful. So it's a very, very, I think a lot of our members have taken to it, probably because it's easy to understand, easy to follow, and we profit. So the open house we're doing next week gives everybody a chance to come on in, kick the tires on it, take a look around, see what they think all week long.
Awesome. Well, we do have the link in the chat to sign up for that. I'll go ahead and post that in the chat. Sorry, the link is in the description right now. I'll post it in the chat as well, just to make it easy. We also have that QR code on the screen right there. Christian, always great to have you on. Enjoy the rest of your Tuesday. Happy trading and stay green.
You bet, guys. Thanks. See you next time.
Yes,
Thanks,
sir.
Christian.
All right, guys, that was Christian Tharp again from T3 Trading. Dennis, we still got about 10 minutes left, and we still have some earnings reports we haven't gotten to. We'll just rip through those real quick.
We should probably preview in the few minutes that we have, because there was a lot of earnings reports. I mean, we had Pfizer. Obviously, we had SoFi too. Maybe do SoFi, because a lot of people like SoFi. Do that one quick. And
I was just going to run through like Pfizer trading pretty flat, slightly higher after their report was decent. EPS came in at 60 cents, beat the 46-cent estimate. Sales came in at 13.28 billion, beat the $13 billion estimate. Raises the full year 2024 outlook. So all in all, a good report. The bar was maybe a little bit high for Pfizer, which had been perking up before the report. Only up about 2% here. Let's move over to SoFi real quick, trading up about 3.5%. The EPS was in line. Sales came in at 599 million, beat the $564 million estimate. The guidance here, let's see, sees full year revenue at 2.425 billion to 4.46 versus the $2.783 billion estimate. It's a huge range there for SoFi. They said they're going to see revenue anywhere from between 2.4 to 4.6. It's a big range. Either way, the earnings boost guidance, stock trading higher by about 3.5% this morning. We'll go out to the daily chart. You can see here getting a little pop.
Yeah, look at the pre-market action here. Bring up the pre-market action if you can. That's the one we want to see, because we're pre-market prep. There you go. Sold off initially and now starting to pop up here. This one's loved by the retail community. And you know what? The setup isn't bad here. I mean, it's been a consolidation station forever. So could this be the quarter to ignite it a little bit? It's trying, but it seems like every time this thing gets some life, then it just eventually starts to leak out again. You have obviously overhead supply issues here too.
All right, now let's go into some previews for tonight. Obviously, we do have Microsoft set to report. The biggest company in the world is set to report today. I don't know if we have what the street is looking for it here right now. Either way, I guess you want to take a look at the chart as we head into earnings. Dennis, how do you want to preview that?
I mean, the setup isn't bad. They have the CrowdStrike issue too, a little bit on them. It was down last night on that, and it's popping back here now. You got the double bottom in place, 417. That's important. So expected move. We'll just quickly go and grab that for you here too. If the chat has it, then I don't have to do the math, but I'm just going to the options, opening up my options chain, bringing it up from the closing prices of last night, because options don't trade pre-market, adding up the calls and the puts. Looks like about $21 ballparking it off the 425. So about 21 bucks. So it's a big expected move. $21 on the downside to bring you into the low 400s. On the upside, it brings you back into, the 450 area. So there's your bogey. And it's important. If you're trading earnings, always keep in mind those expected moves, because a lot of times they bounce, they fall down to where the expected move was on a disappointment, and then sometimes bounce off of it. On a beat, sometimes they go up to where the expected move was, and then they struggle at it. So always keep that in mind if you're trading earnings reports. The expected move is very important, because that's where the optionality is pricing it in. And there's obviously people who have strikes at these prices as well. It's a better setup than it has been, because it's weak into the report. If they can say anything okay, maybe, it gets a lift here. It's also curveball. This is going to be a hard one to hit. I'm probably not going to play it. Like PayPal, reason I brought that through earnings is kind of felt like there was a good opportunity for a dead cat bounce there, really. Microsoft, it's a little weak in the report, but it's bounced the last couple days. It's kind of a hard ball to hit.
Yeah, and what I'd be worried about potentially with Microsoft here, and I mentioned this the other day, is just that with all these big tech companies spending so much on AI, you're gonna, hear them talk about that in the earnings calls, and they probably, if I had to guess, won't give exact numbers in terms of like what they're expecting the return to be on these investments, because they don't know yet. This stuff hasn't played out. Like, if Microsoft integrating AI into its Copilot, and of course has invested in OpenAI and all this stuff. But right now it's more like just money spent in R&D and developing this stuff, rather than its actual like monetary returns, unless of course you're a semi company like Nvidia, who's seen their sales go through the roof on it. So you might hear them say like some bullish things about AI and say like, this has been a great investment for us so far. I just doubt they're going to give like specific numbers. Oh, we expect our AI investments to generate $100 billion in revenue over the next 3 years. I don't think you're going to hear a lot about that. So could be something to watch this earnings cycle from the big tech companies. Speaking of, we do have AMD reporting tonight too, which will, which will most likely have some implications for the overall semiconductor industry, not just AMD. And this setup, is looking kind of ugly into the report.
The stock has been, I actually like this set. So again, the stock chart's been ugly, so it's counterintuitive, but I like a weak chart going into an earnings report because the bar is very low. I hate when they've run up $40 into the earnings report. It's like they're going to have to blow it away to go higher. If AMD says anything that's okay here, you got to think it could bounce a bit. Still have half size position AMD in the long-term portfolio. Stock I bought at 90. Wish I would have sold it all, obviously, up at 180. Didn't sell it all, sold half. Should have sold it all. Stock's down 140. It's been an ugly, ugly move here for the last, has there been any chip stock really hit as hard as AMD in the last 2 weeks? 185 to 136. Like, that's a full-on, little mini crash for AMD. So the setup here is actually not bad. To say anything okay, I think it bounces.
I hope so, because otherwise, if AMD
are you in it?
Well, no, but I'm saying if AMD moves lower, then it'll probably hurt my Nvidia holdings and everything else. So I'm hoping for a good report.
I'm not sure AMD matters as much for Nvidia as everybody thinks. It will move temporarily. Nvidia is obviously going to move off of AMD, and some of the chips are going to move off of AMD. But I don't think I think Nvidia is doing its own thing here right now, and Nvidia is just in a corrective phase. That's why I didn't sell it all. I do think Nvidia, is going to continue to grow and going to continue to be in the pole position of AI. It just got overdone. When it goes from 80 to 140, it feels like in a heartbeat. And, you got the post-split hangover here happening now, 111. People aren't as excited as they were 3-4 months ago about AI. They're more excited about interest rates going down and the rally broadening out. There's lots of reasons to just be cautious about just jumping and buying, the first dip in Nvidia here.
All right, we also have Starbucks reporting tonight, which is another stock that has been getting kind of beat up into this report. We'll go down to a shorter time frame chart, like a 2-hour chart here, and see. Starbucks here just in the last month or so has gone from $83 a share, got all the way down to $70 a share, popped back up to $80 a share, went back down to $73 a share, is now trading right around $75 as we head into this report. What are you feeling about Starbucks?
Well, you got the Elliott put here. And what I mean by that is when Elliott comes in and it's fairly recent, stocks don't usually tank when Elliott's in there. So there's investors, I will just invest just because. So if Starbucks actually gets hit on this earnings, I think the dip gets bought. If they say anything okay, it could rally. So the setup isn't bad here either to actually take this long into the report. I haven't decided if I'm going to, but again, when I'm taking stocks in through a report, I do it half size position max, because there's major risk when you're taking stocks through a report, unless I'm really convicted. I mean, this is talking trading. I'm thinking about, I don't have a position, thinking about intentionally just buying it at the close to take it through the report. I'm tempted because I think if it goes down, I think there's buyers below because Elliott is in there now. And I think if they say anything okay, the bar is low enough, this thing could pop over $80. So I'm actually tempted to intentionally take the stock into the close, just to take it through the earnings report. I'm tempted.
All right, well, that takes us to 9 a.m. Thank you to everyone who tuned in to Pre-Market Prep this morning. Again, tomorrow we'll have a lot to talk about with Microsoft's earnings, AMD's earnings, and hopefully tomorrow's not like what happened last week after we got some big tech earnings the night before with Tesla and Google, because that was ugly last week. So as long as we get one out of the two, that's an okay report. We should avoid another volatile day like that. Dennis, any final words as we head into the open here?
Expect chop. I think on these major earnings reports, I think we could show a little bit of strength today into these reports as people get excited, about the Microsoft AMD reports. I'd expect a lot of chop. There's no clean setups here. So I think that's going to equal chop. The name of the show is chop. I think it continues. I think we're going to chop through this earnings season. I don't think it's going to be one that here we are, AI is killing it here. We all kind of expect AI to kill it. We expect Microsoft to beat pretty handily. So I think you're going to see a pop, drop, pop. I think a lot of chop in the majority of these tech earnings that are coming up.
And just a heads up, we do have those earnings calls streaming on our YouTube channel here on Benzinga. So if you, are in Starbucks, AMD, or Microsoft and you want to follow along with those calls, come back to our YouTube channel around 5:30 p.m. Eastern time. That will be a wrap for us. See you guys tomorrow morning.